Yes, ma'am.
All right, cool. All right, just let me know whenever you're ready.
All right, let's get it going.
All right, here we go. Hot mic.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. Got to get some new music in here every now and then. Let you know it's a live show. Folks, I hope you guys are watching the Astros. I don't know if it's just because the Rangers are that bad or if Houston is just that good. It's a great series. Obviously, home opener tonight. Rumor on the street is the roof will be open tonight. So those of you who are going to the game, have a lot of fun. We're going to be working tonight. We have an invitation-only event, the Landlord Workshop, and we'll be hosting that event this evening. In fact, this whole week, we are chocked full of events. We've got Landlord Workshop tonight. I'll be at the Fort Bend RIA Tuesday night. Wednesday night, for those of y'all in Dallas, Tom and I will be live at Gillies. We're not playing. We're not singing or anything. We're hosting a networking and technical real estate event Wednesday nights. The first time we're doing this event in DFW. You can go to Right Path Real Estate to get more information, but it's going to be a fantastic event. We will be doing that monthly. It'll be the first Wednesday of the month, along with Jet Lending, Patent Law Firm, Quest IRA, a whole bunch of us. It's like it's all the people who are sponsors of this radio show. We're like this traveling road show. So we're going to be up there Wednesday night. Thursday night is our free event here at the offices on 11451 Katy Freeway. If you want an introduction to our income and wealth workshop, that's where you can see that'll be here Thursday night. And then Friday night, I don't know. Maybe we have Friday night off. I know Saturday I'm doing a bike ride, and Sunday I'm doing Sugarland Wine and Food Fest. So it's going to be a busy week. We are fully prepared for that. So in any case, guys, let's get on with the show today. The theme of today's show, I've got two, and I'm going to start with one. I'm going to start with the first one. That's usually the best place to start is number one. And it's get off the X. Get off the X. One of the things I'll tell you, if you ever do any firearms training, in particular live firearms training, the X is where you're standing. In other words, the X is where you start. The X is where you are when something bad goes down. And you'll hear a lot of trainers will tell you, get off the X. Get off the X. In fact, one of my favorite movies, it's got Brad Pitt in it. It's all with the zombies running around. I can't remember the name of it. There was a book written after it. I've read the book a couple of times. Really fun little book. But in that movie, Brad Pitt plays he's one of these like peacekeeper NATO guys. And he's been to all these awful countries where there's been all these awful outbreaks. And he says the people that die are the ones that don't move. You've got to move. And you hear it time and time again in any of these life-saving situations. There are stories of ships being wrecked, Titanic being one of them, where when calamity strikes, people freeze up. They just don't move. They just stand there. In fact, I imagine if you go back and read some of the accounts of 9/11, there are probably a lot of folks that just got stuck in they just stood there. Like, what do I do? I don't know what to do. Just stand here. And whenever you're doing any of this training, they'll tell you, get off the X. The people who survive are the ones that move. You've got to move. And what does that really mean? What it really means is you got to take action. You got to get off the X. The X is where you are now. Second theme of today's show is I'm going to explain how to lose $10,000 a month. By the way, our case study and networking event, which is the third Thursday of the month, I'm going to teach you how to lose money in real estate. It's one of our most popular topics, how to lose money in real estate. I'm going to share with you where we lost money in our business in 2018. It's a great event because no one talks about losing money in this business, right? It's all Lambos and, VIP bottle service, and it's not. Reality is it's a business you can lose money. We occasionally lose money on deals. So what better way than to share with you how we've lost money in real estate on the flipping and wholesaling side? We actually don't ever lose money on rentals. Isn't that a fascinating case study? It's almost impossible to screw up rental properties. It really is. It's one of my favorite ways to make money in real estate, build wealth in real estate, is through rental properties. I don't want to say you can't lose money on them, but man, it is really hard to screw up. It really is. So you've got to move. You got to get off the X. Actually, Eric just said on Facebook, he said it's World War Z. So if you ever watch World War Z, it's one of these. I read somewhere that it was the movie he made the most money on. And they're supposed to be coming out with another one, if I read that correctly. But one of the things Brad Pitt's character says in the movie is he says, the people who don't survive are the ones that stay. You have got to move. You can't stay where you are. What that really means is you've got to take action. I was thinking about this on the way to work this morning, way to the studio. And that is all of the calamity that's going to happen in retirement, you are not immune to. You're not immune to the increase in healthcare costs. You're not immune to the risk of investing in the market, in the capital markets. And the problem is that the only way you immunize yourself from some of those financial challenges in retirement is putting your dollars into other assets. We chose real estate to do that. I'm going to beat this like a drum forever. I'll just tell you that right now. You're going to get tired of it. But until you submit and realize it's correct, I'm just going to keep saying it. When I heard Dr. Dotzauer say, hey, an investment is something you understand that cash flows. And I'm paraphrasing here. Something that you understand and it cash flows. And for the typical American family, what do they understand better than the house that they live in? You really do. I mean, you understand that asset very well. So instead of investing in all this nonsense out on the stock market, by the way, I just posted this morning the free cash flows for Tesla. Now, I like Elon Musk, but Tesla's never made any money. And everyone's shocked that their stock is now, he lost another 5% when he made this little April Fool's joke yesterday about Tesla filing for bankruptcy. That's what you're invested in. That's what your fund manager is invested in. Heck, Donald Trump right now is on the warpath of Amazon. There's a law in place that Amazon, and it's really not what Amazon is doing, it's how the federal government and the U.S. Post Office works. Amazon is being subsidized to the tune of about $1.50 per package. And he is on this warpath to say, look, we need to stop that. They need to pay full freight for their packaging. If that comes to fruition, that's going to hit Amazon for somewhere between $2 and $3 billion a year. What do you know about what you're investing in? If you're invested in the stock market or in a mutual fund that's invested heavily, or an ETF, a lot of these ETFs, a lot of these passively managed funds are invested in stuff like Amazon and Apple. Do you really understand what's going on at Amazon? Do you really understand what's going on at Apple? Well, Jason, I just kind of buy it and it keeps going up. Yeah, and you can take that stance if you want. It's only your retirement. I hope you're making the right choice. So let's compare that. Used to work for this guy, Bob. One of his favorite sayings was, as compared to what? And I love it. I use it all the time. As compared to what? So let's compare. You can invest in Amazon, who the president of the United States, arguably the most powerful man in the world, has got guns blazing for your retirement account if you are invested in Amazon. Or Tesla, or whoever it is. What do you really understand about those investments? Versus, as compared to what? Buying a single-family rental in the neighborhood that you've lived for the last 10, 15 years. The neighborhood that you have raised your kids in. The neighborhood that you live and work in, go to church in, know all your neighbors. You tell me which investment you know more about. Remember, there's two elements to an investment.
1 minute.
Something you know something about, and it produces cash. Does that other stuff produce cash? Tell you it doesn't. Only way you derive any value from the vast majority of equities out there is by selling it. Think about that for a minute. You have to sell it to make any money from it. Is that really investing? As opposed to the 5 elements in which we calculate the return for a piece of single-family real estate. We get back from the break. We're going to talk more about getting off the X and how to lose $10,000 a month. It's Jason Bible, Right Path Real Estate.
Mike's off.
Morning, Daniel.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Are you expecting to close accurately, on
2
time,
minutes.
and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Great article here. I want to explain what's going on because this is probably going to hit the news, and I want to give you guys a little bit of analysis here because the way the news is going to report this is it's bad and the world's ending because Trump's president and it's terrible. Boo. It's all that other I'll tell you what, do not watch the news for your mental health. Just don't. I watched Meet the Press yesterday, and I'm like, I can't even watch this anymore. It's gotten so bad. Anyways, article's titled, Homeowners Tapping Equity in Cash-Out Refi, Highest Level Since 2008. Homeowners tapping equity in cash-out refis, highest level since 2008. Okay, couple of things going on here. As we detailed on Tuesday, the mortgage refis have cratered to levels not seen since December 2008, amid a spike in interest and mortgage rates. Simply put, the population of borrowers who both qualify for refi and want one given the higher rates has collapsed. Let me explain what that means. That means if I wanted to refinance my house and I have the ability to do so, I'm not doing it. If I have the ability to refi, but I chose not to. There's a couple of things going on here. It assumes that because interest rates are on the rise or because some other financial condition, the homeowner, am no longer willing to cash out equity from my house. Here's the problem. Here's the problem with the vast majority of articles written like this. And you can see it not only on the finance side, but you can see it in health. You see it in politics. You see it's a classic example of taking one variable and saying, oh no, the world's about to collapse just like it did in 2008 because this one thing is happening. And they get everybody all worked up. You've got to take a lot of these articles. You can't take them at face value. You've got to see everything else that's going on in the economy. Here's the biggest news coming out of the first quarter. By the way, guys, Q2 started yesterday. How are your first quarter goals going? We're actually going to talk about that Wednesday morning with Tom and I on the show. But Q1, the big story coming out of the first quarter is all the employment data. I've been saying this for years, People think I'm crazy until it happens. And that is, as the cost of labor increases, we'll also see a small increase in inflation, but we'll see a downturn in the market. Meaning, what's good for Main Street is not good for Wall Street. That little flash crash we had, I can't say it was totally the reason for this, but when you saw those January payroll numbers come in, when you saw the hourly wage increase, that's a huge issue for Wall Street. It directly impacts their free cash flow, which also impacts, well, it should anyways, the value of their stock, the value of their equities, and in some cases, some of their debt. That's the big story coming out of Q1. If I'm making more money, let's wear our hat. You know what I like to do with these articles like this? I like to wear my hat like I'm the one they're writing about. So here I am. I bought a house a couple years ago. By the way, how long have interest rates been this low? I can go back and look. 2010? I mean, it's coming up on 10 years. We've had historically low interest rates. I think the 10-year dropped below 1.5, which it's never been that low. The 10 years what really dictates what mortgage rates are. I can go look during the break. But we've had a good solid 7-8 years of historically low interest rates. At some point, everybody who's wanted to refi has refied. If you are simply going for a lower payment, it actually says that in this article. Let me read it to you real quick. When rates are low, the primary goal of refinancing is to reduce the monthly payment. Duh. Really? When rates are low, the primary goal of refinancing is to reduce the monthly payment, wrote researchers for the Urban Institute in a recent report. But when rates are high, borrowers have no incentive to refinance for rate reasons. Those who still refinance tend to be driven more by their desire to cash out. I'm so glad we got somebody doing research on this stuff. I mean, whew. When rates are low, people have a tendency to refinance. And when rates begin to creep up, those who tend to refinance pull cash out. I'm going to say that again because this also cuts at another lie you hear all the time. I'm going to read that again because there's a lie you're told about interest rates and prices of houses. It's a complete lie. Absolute complete lie. I'm going to read this sentence again. In a recent report, when interest rates are high, borrowers have no incentive to refinance for rate reasons. Those who still refinance tend to be driven more by their desire to cash out. But wait a second. Everyone keeps telling me, and by everyone, I mean all of the, quote, real estate experts and economists, keep telling me that as interest rates rise, the price of houses fall. That is not true. That is absolutely not true. Because if interest rates rise and the prices of houses fall, that also means the value, what those houses are worth, falls as well, which also means I cannot cash out refi because I will have little to no equity. Here's the problem, guys. When you read articles like this, the only way to find the truth is it's in these little bits and pieces. Because what's considered conventional wisdom is 9 times out of 10 a bold-faced falsehood or it's an absolute lie. Every single time. Interest rate rise, housing market's going to collapse. BS. Not true. Absolutely not true. Here's what happens. As interest rates rise, banks and what's called the secondary market are willing to take a little more risk. What does that mean? That means they're willing to take borrowers that are a little more risky. Credit score's not as high, not as large down payment, not as consistent job history. Maybe they're willing to do a more higher priced house or a lower priced house. What happens is there are more buyers in the marketplace. I read to you Friday the HAR report. We're down to 3.2 months of inventory. Interest rates continue to rise. Lending standards continue to relax to allow more risky borrowers in the market. You thought this market was hot before. It's just going to get worse. That's what will happen. There are a litany of people out there that cannot get a home mortgage. It's not that they can't afford it. They've got dings in their credit. They have something in their borrower profile that does not allow them to qualify for a mortgage. I can tell you this is absolute fact because we've seen a massive expansion in the last 5 years in what's called non-QM loans. Those are non-qualified mortgages, meaning they don't fit the Fannie or Freddie profile. We will begin to see those mortgage standards relax. More people enter the market. That's why less people are refining. The folks that have, if you read down here at the bottom of the article, the folks that have a 720 plus credit score and have an 80+% or lower loan to value have already refied. Those are just great borrowers. Those folks have already refinanced. As interest rates rise, those people aren't going to refi anymore. I got an 800 plus credit score. I'm into my house for 66% loan to value. Do you think I'm going to go refi? No, I don't need the money, and I can't get interest rates any lower. So what's the point? Who refis right now? People want the cash out, but that's such a small percentage. People aren't refining. Why? We haven't even started talking about employment yet. We get back from the break. We're going to talk about how to lose $10,000 a month. It's Jason Bible, Right Path Real Estate.
Mike's off.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have
Hey, Phil. Oh, the Seattle crew. It's on the radio show. It's like 3 in the morning there, right? Is it early?
Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas. valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
All right,
Time
minute.
is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. As people stay in their homes longer, we see people reinvesting in their homes by using equity to update their homes and do repair work. We've seen a huge expansion of the types of retirement options people have. One is aging in place and retrofitting your house. Let me explain what's going on here. As I have heard this, I actually saw this. My wife was watching one of these like fix this house, go find a busted house show where they take, would-be home, or maybe it was like a house switching show. Like they rehab one house to sell and they move into another one, rehab that one. I can't remember. There's so many of these shows now. And this couple was downsizing. They had, I think they had like 4 kids. 3 of them were off to college. One of them was about to be out of the household. And they had like this 4,500 square foot house in like Georgia somewhere. So they were downsizing to a 2,600 square foot house. And they were shocked to find that the 2,500 square foot house was the same price as their 4,500 square foot house when they bought it however many years ago. What a lot of retirees are starting to find out is that they can't downsize because the smaller house costs the same, if not more, than what they paid for the current house they're living in. So it doesn't make any sense to move. Much like refis. Doesn't make any sense to refi. The interest rates, they're just not low. So why would you refi? And the boomers looked around. They said, well, if my mortgage is cheaper than if I were to move, so let's just stay here and fix the house up. Let's take $50,000 out and update the kitchen. Still got enough equity in it. In the last go-around, many homeowners blew the money on splashy purchases like vacations and boats, but lenders were complicit too, offering loans that were as much as 100% of the existing home value. So if we don't go past 80% loan to value, we're fine. You can spend $50,000 redoing your kitchen, go for it. I don't think it's a wise investment, but nobody asked me. So that's what's happening in the economy. Now, when you hear these articles, you're going to hear, oh my gosh, refinances have, completely imploded. And of course they have, because rates have gone up. And your prime borrowers have already locked in at the lowest rate in a lifetime. The other thing with cash outs, and you've only seen a couple of articles on this, and I do think when a couple of companies stepped in to stop this, I think it was a good thing. And I'm usually not for these sorts of interventions, but I think it was a good thing in this case. And that is, you saw a lot of people who were taking equity out of their houses to go invest in Bitcoin. I kid you not, Google it. There were a lot of people that did it. I hadn't talked to the guys at Quest IRA, but I'd love to ask them how many phone calls they got from people who wanted to use a self-directed IRA to invest in Bitcoin. I couldn't think of a worse investment. I mean, I could see taking the money, going out to the fire pit in your backyard and setting it on fire. I think that would probably give you more value because at least it would make you warm than to invest in something like Bitcoin. Take a HELOC out, go to the backyard, set the cash on fire. At least it'll make you warm. But when Google stepped in, Facebook stepped in, some other media company stepped in and said, all right, guys, we're not going to allow you to do cryptocurrency marketing, I think that was a good thing. There was a time when I thought, I've always tried to have this optimistic view of people in general and say that, nobody's really stupid. They're just busy doing other stuff. Like, people aren't dumb, right? I mean, you think, now granted, there's the average intelligence. There's people that are below, there are people that are above average, but most people fall into that, 1 or 2 standard deviations of the mean. And you think that people make silly decisions all the time, not because they're dumb, but just that they're just not informed. They're busy, right? Busy living life. But I got to tell you, the last couple of years, I've seen some things where I'm like, that's just, you've got to be kidding me. This Bitcoin stuff is... And then day trading's another one too, but I'm not a big fan of the day trading. So I'm glad companies stepped in and stopped that because I think people were going to start losing their homes. Now, thankfully, lenders are smart enough this time to say, hey, look, we'll lend you up to 80% loan to value. We're not doing these 120% cash outs. That's insane. So the bank's always protected with about 20% equity, which means they might break even if they had to take any of these homes back, assuming there's not a big collapse in real estate. What's the other problem? What's the other reason that, let's say I'm a boomer, my kids have moved out, or I'm a late Gen Xer, kids are off to college, I want to downsize. Why are those houses that are smaller cost as much, if not more, than the house I live in now? Answer's real simple. Because they're not making any more of them. I was on a bike ride this weekend. We did, I was supposed to do 60 miles, and it didn't happen. I worked out Friday. I got on the bike Saturday morning, and 45 miles, that was it. That's all I had in me. And I passed a bunch of neighborhoods in Fulshire. By the way, if you guys in Houston have not been out to Fulshire, that was a culture shock. I was blown away by Fulshire. I had no idea the high end of Katy has moved out of Katy and moved into Fulshire. That is a very nice little town. Very, very nice. We did a bike ride out of that candy shop right there in downtown Fulshire, which, by the way, sells candy cigarettes. And you bet the Easter Bunny brought some candy cigarettes on Sunday morning. I mean, who sells candy cigarettes? I thought they were illegal. It's like, Hydroshock ammunition and candy cigarettes. Can't have that anymore. So we got some candy cigarettes. So anyways, they have this big, Bike Barn was also, I think Bike Barn was the big sponsor there. Of course, St. Arnold's, we had the whole squad out there and did this big bike ride. So we're riding around Fulshire. I didn't see one neighborhood. I'm trying to remember if I saw one below 300,000. I didn't see. If I did, it might have been one. In fact, most of the neighborhoods I rode by were 400 to 700. I mean, it's like the people who had nice places in Katy said, we're kind of done with Katy and we're moving out to Fulshire. The Fort Bend Parkway terminates, not Fort Bend Parkway, the toll road, West Park Toll Road terminates real close to Fulshire, downtown Fulshire. So that's what's, my guess is that's what started all that growth 6-7 years ago. But I hadn't been out that far in forever. Now, of course, somebody told me that part of Cinco Ranch is technically in Fulshire, and I'm like, I don't know if I really agree with that, but okay, we'll split the difference on that one. But Fulshire has just exploded. I was actually, while I was on the bike, I was looking at real estate out there. It's amazing. Lots near downtown were going for over $100,000, 7,500 square foot lots. So for some of you guys that like doing new construction, cute little bungalows, all that kind of stuff, I might want to look in and around downtown Fulshire. That's going to be the spot. There's still a lot of stuff that's old, that's really torn up out there, but I'll tell you, there are some gorgeous houses, big pieces of land. They got polo fields out there for all. I mean, in Fulshire, it blew me away. But I'll tell you, when I was riding around out there, I would guess, I'd have to pull it up. What's the median price of new construction in Fulshire? Is it $500,000? A lot of this stuff's not going to end up on HAR because it's all custom build. So it's not going to be reported on HAR. You have to go pull the tax records and see what they're building these things as. But I'm guessing it's $500,000. So here you are, you got the kids out of college. Now you want to downsize. Oh, I want to get a little, I want to get an acre or two out in Fulshire, which 5 or 6 years ago was the middle of nowhere. And you look and you go, well, I don't want to move from Cinco Ranch to Fulshire. It's going to cost me more and I get half the house.
2 minutes.
That's what's happening in this country. The appreciation is spectacular. I'm hosting an event April 12th. I'm starting a little real estate club down in Sugar Land. Sugar Land, Katy, real estate networking group where I'll be teaching every month, once a month for about an hour. And one of the things I'm teaching on this month is appreciation. It's completely undervalued. I do not know why no one teaches on it. I mean, we've got the predictive models. I mean, we could tell you where these things are going to start appreciating at. It's not hard to figure it out if you know what you're doing. But when you look at the 5 elements you use to calculate the rate of return in a single-family asset, appreciation is the biggest one. Now, I'll tell you right now, we don't invest for appreciation. I'll tell you how I do it. When I go buy a house,
1 minute.
I can justify paying a little bit more just because of the appreciation. That's the best way I can describe it. I'll pay a little bit more for an asset that I can tell for the last 5 years appreciated 5, 6, 7, 8, 10, 12% a year. I don't mind paying a little bit more for that. Now, is the $700,000 house in Fulshire going to appreciate 7, 8% a year? Probably not. But that $200,000 house sure will. And the question is why? It's real simple, guys. There's no such thing as affordable housing anymore. They can't build it anymore. It's gone. It's been gone for 12 years now. Appreciation is huge. We get back from the break. I'm going to finally talk about how to lose $10,000 a month. It's Jason Bible, Right Path Real Estate.
Mike's off.
Morning, Ryan.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract to close associate. Give me a call today at 713-579-3611 and let's talk about how we can help you on your next transaction. NMLS 514497.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. A quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before ever repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com. And don't forget to tell us you heard about us at Right Path Real Estate.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
You found or inherited a great investment
1
property.
minute.
Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, here we go. Hot mics.
Jason Bible, Right Path Real Estate. Here's how you lose $10,000 a month. If you're working with a really great lender, you should be able to put, and you qualify, I mean, you got to have good credit, you got to have some money, all that kind of stuff. Which is, I mean, if you're listening to this radio show, I'd be real shocked if you couldn't buy some rental properties. But you got a good credit score, you got some cash in the bank, got a decent little job. You work with a good lender, they should be able to get you 10 Fannie Mae mortgages in your name for rental properties. That's 10. 10. We know based off cash flow and appreciation alone, meaning how much these things cash flow. A single family rental property should cash flow you about $300 a month. We also know that they're appreciating about $700 a month, and that's conservative. So $300 plus $700 is $1,000. For every month you don't have 10 rental properties in your portfolio, you're losing $10,000 a month. So I'm going to say that again. For every month you do not have 10 rental properties in your portfolio, you are losing $10,000 a month. If you don't get off the X, if you don't get off the starting line, if you don't start moving towards buying single-family houses, you are going to miss one of the greatest waves of appreciation that we will see in our lifetimes in Houston, Texas. Drive around the neighborhoods that used to be, let's say a neighborhood below the one you lived in, and you will be shocked at what those things are selling for. For some of y'all have moved a couple of times, go back and look and see what that house is worth that let's say a lot of y'all a little bit older. Go back and look and see what your first house is worth today. It's going to shock you. Every month you do not have 10 rental properties in your portfolio, you are losing $10,000 a month. That's $120,000 a year.
1 minute.
Best place to learn how to buy rental properties, go to rightpathrealestate.com. We've got an event in DFW. We're going to be at Gillies on Wednesday night. Go to rightpathrealestate.com. We've got our landlord workshop tonight. That's by invite only. So for those of y'all who got the email, you're welcome to come out tonight. That's going to be in City Center and Memorial.
30 seconds.
We'll see you guys Thursday night at our free event. Go to rightpathrealestate.com. Tom will be here tomorrow for Build Your Team Tuesday. I want to thank all you guys for listening. Tom and I will be on the show Wednesday morning. So we'll see you guys then. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com.